Gold's price remained relatively stable in the past week. Today we are to discuss the fundamental challenges laid ahead for the precious metal, as well as upcoming financial releases that may affect the direction of its price action. Finally, we will be concluding this report with a technical analysis of gold's 4-hour chart. It should be noted that gold's price moved in an upwards fashion, with the dollar losing ground during the same period. Observing the movement of the two trading instruments leads to the conclusion that the negative correlation existing between the two has resurfaced over the past week. We expect the negative correlation between the dollar and gold to be maintained, in which case, should the dollar cede further ground, we may see gold's price increasing. Fed Chair Powell is set to testify before the U.S. Congress later on today. The testimony is customary for the sitting Fed Chair, who will face questions from the Senate Committee on Banking, Housing, and Urban Affairs. It is our view that the Fed Chair may face difficult questions aimed at the Federal Reserve's monetary policy and whether or not it will be prudent to cut interest rates earlier than expected. Nonetheless, from a more general perspective, should the Fed Chair's comments appear to be relatively dovish in nature, i.e. implying that the labor market is cooling and that the progress is being made to bringing inflation down to the bank's 2% target, it could weigh on the greenback while providing support for the gold price given their inverse relationship with one another. On the flip side, should Fed Chair Powell imply that the bank's monetary policy may need to remain restrictive for a longer time of period, it could aid the dollar, which in turn may weigh on the precious metals price. The U.S. employment data for June was released this past Friday. Despite the non-farm payroll figure coming in higher than expected at 206,000, the unemployment rate ticked upwards from 4% to 4.1%, implying a loosening labor market. The implications of a loosening labor market may increase pressure on Fed policymakers to ease their monetary policy stance, which in turn may weigh on the dollar and thus aid gold's price given their inverse relationship. As such, attention now may turn to the week's release of the US CPI rates for June. The current expectations by economists are for the CPI rates to showcase easing inflationary pressures on a year-on-year basis, which in turn may fuel further our aforementioned scenario of an increase in pressure on Fed policymakers to start cutting interest rates. Therefore, should the CPI rate on a year-on-year basis come in as expected or lower, it may weigh on the greenback while providing support for gold's price. We also note that since our last report, the yields of US bonds tended to be on a decline, with longer bonds having a more abrupt upwards movement. Overall, the decline of US yields tended to reduce the attractiveness of US bonds as an alternative safe haven investment, which in turn may have facilitated inflows into the precious metal. Should US yields continue to decline in the coming week, we may see investments being diverted from US bonds towards gold, thus providing some bullish tendencies for gold's price. Gold's price moved higher last week, yet appears to be moving in a downwards fashion since the beginning of the week. We opt for a bearish bias for the commodity, and supporting our case is the RSI indicator below our chart, which despite currently registering a figure near 50, has dropped from the figure of 70 over the past few trading sessions. The decline may imply that the bullish momentum may be fading away. For our bearish outlook to continue, we would require a clear break below the 2,350 support level, with the next possible target for the bears being the 2,320 support base. On the flip side, for a bullish outlook, we would require a break above the 2,375 resistance level, with the next possible target for the bulls being the 2,405 resistance ceiling. Lastly, for a sideways bias, we would require the commodity to remain confined between the 2,350 support level and the 2,375 resistance line. Thank you for being with us for today's financial update. We wish you solid trading from all of us here at IronFX.